Hey everyone, it's Kenton. I just wanted to say, I know this is a longer video, but this is really important information talking about a subject we're hearing a lot right now, which is called forbearance. I'm going to go over some information, talk about the pros and cons, and some of the things that you need to watch out for. So make sure to watch till the end of this video and make sure to share it with your friends, family members, coworkers, anyone that you can that might be impacted by this and this topic I'm going to talk about. All right, thanks so much. Here's the video. Hey everyone, it's Kenton Becker with American Pacific Mortgage. I've got a quick video tip for you this week, kind of on a timely subject that we're hearing out there in a lot of news reports, the media, and that has to do with forbearance or mortgage forbearance. I want to talk first off about what it is, and then I want to go over a few bullet points if this is something that applies to you or you want more information on it. First off, I just want to say I hope you and your families are safe and you're staying healthy, and just in this kind of crazy time that we're in, I hope you're all doing well. Okay, so first off, what is forbearance? Forbearance can come with it a lot of different names. A lot of times people equate forbearance, or they think of forbearance in terms of delayed payments. Or honestly, kind of the misinformation part is they think of forbearance as no payments. And that's really not the way that it should be looked at. Not forgiveness of payments, but instead a delay of your payments. There's some new law and there's some new federal regulation called the CARES Act. I have some notes in front of me because I want to make sure I don't misspeak or say anything wrong. So if you're seeing me read this, it's because I don't want to say something that's not the right information. Under the CARES Act, if your mortgage is federally backed, a federally backed mortgage, you have two mortgage relief options. The two options are: one, if you experience financial hardship due to the coronavirus pandemic, you have a right to request a forbearance for up to 180 days. You also have a right to request a one-time extension for another 180 days. So that'd be a max of 1 year or 365 days. You have to contact your loan servicer to request the forbearance. So you don't call your bank. You don't even necessarily call the original lender or bank that closed your loan. You're going to call the lender that's actually servicing your loan, who you're making your payments to. That's who you'll call to request the forbearance. And if they're a federally backed bank or mortgage, there's no additional fees, there's no penalties, and there's no additional interest for doing this beyond just your normal scheduled amounts that you're going to be paying to your account. So that's the first thing. The second thing is your lender or loan servicer may not foreclose on you for 60 days after March 18th, 2020. CARES Act prohibits lenders and servicers from beginning a judicial or non-judicial foreclosure against you, or from finalizing a foreclosure judgment or sale during this period of time. This is a good thing at the end of the day because it recognizes that, hey, we have an unemployment force right now that's about 25 to 30%. With the numbers gaining, there's a large majority of Americans right now that are out of work and unemployed. So this is giving them a little bit of forgiveness in that area. Now that we've defined what the CARES Act does, we've defined what forbearance is, now we want to go over 7 points that I just want to point out on things that you need to know. First and most important thing is make all your payments on time, if at all possible. Please, again, understand that forbearance is not forgiveness of payments. This does not mean that you can just not make your payment for 12 months and you'll never have to make that payment. Think of forbearance kind of in a way like the same day or 12 months same as cash things that you hear out there. It may mean that you don't have to make your payment for 12 months, but you will have to pay that back at some point. In some situations, you'll have to pay the full amount back at the time that forbearance is done. So 6 months, 12 months, but at the time the forbearance period is up, boom, you have to make that payment back. It may not be in your best interest to just delay your payments and then have a huge bill at the end if you really don't need it. The other way that forbearance can happen is a deferment, where they can actually take those payments and wrap them onto the end of your mortgage. That's going to increase your loan balance. So again, it may help in the short term, but in the long term, it will increase that loan balance and the total time it takes to pay off that loan. Now, also, our company, American Pacific Mortgage, we are not considered a government-backed entity. This means that for us, when we close a loan, until we sell that loan off to a servicer, that loan is not going to be eligible for any forbearance programs. Once a servicer picks up that loan and you begin making your monthly payments, then that servicer, who is federally backed in most cases, will be able to help you with any forbearance questions that you may have. So if we've just recently helped you close a loan, or if you're going through the refinance process, you're going to need to wait until that loan is picked up by a federally backed servicer to be able to go through that process. The third thing I want to point out is you must call the mortgage company that you're paying your mortgage to every month to be approved for the forbearance, deferment, or loan modification. Again, calling your loan officer if you want to get information and just get questions answered, but they really can't help you. And even the original lender that helped you close your loan cannot help you with the forbearance unless that is the company you're making your payments to. If you're making your payments to that bank, then definitely call them, their customer service number. They'll be able to discuss those options with you. The fourth thing I want to point out is skipping payments without approval is going to lead to credit lates or even foreclosure on your home. Just because you hear in the media or you hear out there that the government is or banks are allowing clients to skip payments, lots of misinformation out there, or not make payments, or there's a forgiveness of payments, does not mean that you can just say, well, I don't need to make my house payment. If you do that, you will have 30, 60, 90-day lates and possibly foreclosure. Do not just stop making your monthly payment. That will hurt you. You need to call your servicer, who you're making your payments to, and discuss forbearance options with them. The fifth thing is every mortgage servicer and the company you make which is the company you make your payment to, will handle mortgage relief programs differently. Some companies are going to call it a deferment. Some companies are going to call it a loan modification. Some companies are going to just call it forbearance and you pay the full amount back at the end of the 6 or 12 months. Some companies are going to say they don't offer anything at all. Companies are going to tack it on to the end. That's why it's so important to just contact your servicer and they will be able to discuss what options they are offering at that company. Number 6 is forbearance does not necessarily mean that the number of months relief you receive are tacked on to the end of the loan. Remember that some companies, and I keep going over this because there's a lot of misinformation out there, some companies will take these 6 or 12 months of payments, throw it on to the end of the loan. Other companies are going to say at the end of 6 or 12 months, you got to pay it back in full. 6 months of monthly payments. If you're paying $2,000 a month on your monthly payment, at the end of 6 months, they're going to expect you to pay $12,000 back. That might be fine if you really need that support right now while you get your feet back on the ground. But if you're just looking for relief just because, hey, might as well take advantage of a thing that's available, that may not be a good thing, because at the end of 6 or 12 months, you might be looking at a $12,000 or $24,000 bill that needs to be paid back to the lender. You may or may not have that money at that time. So weigh out the pros and cons on that, because that may actually get you into trouble. The last thing, point number 7, is ask questions. Know what you're getting into before you just sign the dotted line. A lot of companies right now, when you get on the phone with them and you say, I want to do forbearance, they just say, okay, and then they start moving forward. We're finding that many clients are calling them, getting started with this forbearance, and they have no clue if they're going to have to owe the money later, if it's going to be tacked on to the end of the loan, if there's going to be other things involved. To make sure you get all the information first before you move forward with that. Call the company that's listed on your mortgage statement, your payment coupon. That's your servicer. They will have a customer service number on there that you can call. If you can't get a hold of anyone right now, go to their website, and a lot of companies on their actual website, they will have information published on there on forbearance or the CARES Act or deferment, loan modification. It may be one of those terms. But a lot of companies right now, because they are swamped with calls to their departments, They're putting this information on their website. Some of them even have digital forms that can be filled out on their website. So contact them that way if you just can't get a hold of anyone on the phone. I want to go back to one major point just to wrap this all up. If you need forbearance, if you need relief right now and help in this time because maybe of a job loss or unemployment or reduction of hours, then use it. Use this information to help yourself through this time. If you don't need this, if your hours are unchanged, if you're still working, you're still employed, you're still receiving full income and employment and everything, I would maybe encourage you not to go down this road. Just because at the end of the day, if you're flooding the pipelines with this, it might hurt the person that really does need it right now. Keep that in mind. I just encourage you on that. Take it for what it's worth. If you have any questions on this, please comment below. All my contact information is on these videos. So call me, email me, send me a text, whatever you need. I am happy to help answer some questions and maybe point you in the right directions at least, okay? Thank you so much. Make sure to share this video out with friends and family, because if they own a house, sometimes they don't want to vocalize or verbalize the situation they're going through, but maybe they have lost a job. Maybe their income or their hours have been cut back, and sharing this video will provide them useful information that could help them through this time. Or maybe it's a friend or family member that just thinks, great, I don't have to make my payments, and they might be walking down a path that's going to hurt them in the end, because all of a sudden they're going to have a huge bill in 6 or 12 months and not even realize that was the case. All right, sorry this was a longer one. This was, I think, timely information because we're hearing it a lot out there, but I just wanted to make sure to get this information out to you. Thank you for watching these videos. Maybe we'll have a more lighthearted conversation or video on next week. But thanks so much. Have a great week. Stay safe. We'll talk to you real soon.